but I just don't want to sugarcoat this. This is a giant cash problem. All right, welcome to Talking Investing. I am Tom. This is not financial advice, and we're here to talk about all things investing. And today I want to talk to you about a company called Lordstown Motors, stock ticker RIDE, R-I-D-E. They recently reported their Q2 earnings. What I'd like to do in this video is go through their Q2 earnings. Most specifically, we'll talk about cash and production. We'll talk about what some of the problems are, what some of the potential solutions are, and then we'll go take a look at the chart and see what's going on there. Let's just take a quick look. This is Lordstown Motors website, and this is what the fuss is all about. This is their all-electric pickup vehicle, and it's called the Endurance. It has some very interesting technology. They've got some proprietary stuff going on here. I recommend you go to the website and take a look. So this is what they do. So now let's take a look at the second quarter results and talk. Okay, Lordstown Motors reports second quarter 2021 financial results. This came out August 11th, 2021. Today is August 17th, 2021, so this is just a little bit less than a week ago. Key business highlights. Okay, so let's talk cash for a minute here. Reported second quarter 2021 net loss of $108 million. CapEx, capital expenditures, of $121 million. And then they had cash on their balance sheet at June 30th, 2021 of $366 million. So in the second quarter, they lost $108 million from operations. And in addition to that, they spent $121 million on capital expenditures. Because some of the operating costs were non-cash, the total cash run in quarter two was, I believe, $220 million. So that's just one quarter. So you can see these guys are going through a lot of cash. Okay, so then they talk about beginning limited vehicle production in late September. We'll get into their production schedule later. And then the last bullet point under key business highlights, recently secured an equity purchase agreement for access to $400 million in capital. We're going to get into that more as well because that's a little bit more complicated than it looks. Okay, so quickly on production. In the executive summary, they say, we are on track to begin limited production at the end of September and through the fourth quarter and complete vehicle validation and regulatory approvals in December of 2021 and January of 2022. So they are still going through regulatory and approval process at this point with this vehicle. All indications are everything is going just fine, but the point is they are not done with that process, so they're not selling any cars in the fourth quarter. So that's kind of their new timeline for production. This is all pushed back as it continues to be pushed back. You know, one of the reasons is they're still getting their final approvals. Another reason is they don't have enough cash to ramp up production right now. Okay, so the next thing they've done is update a lot of their financial estimates for the year. So 2021 objectives and financial outlook. Expected capital expenditures between $375 million and $400 million. Largely related to prepayments for hard tool purchases. So they raised that. It was about $275 million previously. Now they're looking at $375 to $400 million. Next, expected operating expenses of between $95 million and $105 million in selling, general, and administrative expenses. Between $310 and $320 million in research and development. So each one of these numbers was revised higher here in quarter two than they were in quarter one. They then go on to conclude that they're expecting at the end of quarter three 2021, they're expecting liquidity of between $225 million and $275 million in cash and cash equivalents without including any funds from capital raise. They're saying with the cash they have, they're going to get to the end of Q3 and still have between $225 and $275 million in cash. So, okay, for the moment, we'll take them at their word on that. So we see their cash burn rate in Q2 was $220 million. So at the end of Q3, if they have somewhere between $225 million and $275 million, that would only leave about enough cash left to get them maybe through Q4 2021 and just start into Q1 of 2022. They are going to need to raise some capital. They have said that. That is not a mystery. That's not anything they're denying. They talked about a $400 million equity raise. So I want to take a look at that because that would be the first capital they're talking about dipping into. Okay, so this is their SEC Form 10Q for the second quarter. So this is the quarterly report they have to file with the SEC. I'm going to jump way ahead to page 25. This is management's discussion on operations. So what they're saying here is the company entered into an equity purchase agreement with YA2, pursuant to which YA has committed to purchase up to $400 million of our Class A common stock at our direction from time to time, subject to the satisfaction of certain conditions. So this is giving them access to $400 million in equity from time to time as they need it. So they don't need to go draw down $400 million. They're not doing a $400 million offering. This is a brokered situation where they, over time, at market value, essentially, they can access $400 million. So the problem is the next couple of sentences. The actual amount that we raise under this facility will depend on market conditions and other financing alternatives that we are exploring, as well as limitations in the agreement. In particular, at current market prices of our shares of Class A common stock, without stockholder approval, the exchange cap provision would limit the amount of funds we are able to raise to significantly less than the $400 million commitment under the purchase agreement. So essentially, what has happened is their share price has fallen so much that it's now outside of the parameters of what the shareholders agreed to, and they would have to go back to the shareholders and ask for an exception to this in order to try and bump this back up to the $400 million. Otherwise, they're going to get some amount significantly less than that, to use their words. The reality is, if they go back to their shareholders, it's quite possible they could say yes and approve this equity at a massive dilution underneath the price they had previously agreed to. And the line of reasoning, I guess, would be, at that point, they're probably choosing between going out of business or heavy dilution to their stock price. So, not the two best choices, but they may very well approve that. But the problem is, you're talking about $400 million. So let's take a quick look at something. So they were trading at $5.45 at the end of trading on August 16th. So that left them a market cap of $962 million. Now they're talking about an equity raise of $400 million. So at a market cap of 962 at their current valuation, the problem with this potential equity is that the dilution on people's shares would be massive. They do have some other alternatives. Let's take a quick look at that. Well, we just talked about how that $400 million could be a problem. But they go on to say, due diligence underway with multiple strategic partners that come with potential capital infusion, as well as pursuing external capital sources, including debt and equity-linked securities. One of the things that they're doing that I wanted to talk about really quickly, because I think it could maybe be the one thing that saves this company, there's something called the Advanced Technology Vehicles Manufacturing Loan Program. This is a federal government program. It was established many years ago. There was $25 billion set aside. There's $17 billion left in this fund, and the administration has recently expressed interest in trying to get this money out to some companies that need it to advance our EV infrastructure in the United States. So you will see this is a press release way back from January 13th, 2021. Lordstown Motors has been working with the government all year this year trying to secure this money. So I don't know what stage they're at with this, but there is $17 billion left in the federal government's fund to potentially get some advancement from here for Lordstown Motors. So before we look at the chart, let me just sum up by saying I don't want to sugarcoat this. This is a giant cash problem. I'm going to make this chart analysis simple because basically at this point, this company is in a pass-fail situation. As an aside, please smash the like button, subscribe to the channel, and hit the notification bell so you never miss a video. They are either going to find a way to turn the corner and cash flow themselves, or they're going to run out of money, and that's going to be that. The line I would put at the bottom is at 0. Let's real quick just run through the chart. So you can see February 11th, 2021, they were over $30 a share, which is this line right here. That's not even a line we need to discuss. That is so far out of reach right now. You know, maybe someday over the rainbow, if they can solve their problems, that could be a long-term price target, but it's not on my radar. On June 8th, which was not that long ago, that was 2 months ago, they were at almost $16 a share. So had they raised some capital at that point at $15 or $16 a share, that would have put them in a lot better position than they're sitting right now. Today, they're now trading at, after hours, they're down to $5.46 per share. So that's a third of the money they would have been able to raise just 2 months ago had they done a capital raise then. So obviously, hindsight's 2020. They can't go back in time and do that. Okay, so this is zoomed into the last about 2.5 months. So over here on this side, you'll see June 8th where they hit almost $16. So from June 8th to the present, they've gone from almost $16 all the way down to $5 and change. So this was a previous low that they reached. This line, if I go backwards, this was their all-time low back on May 13th. So you can see here, if I draw this line out, everything since then is underneath their all-time low. You really have to decide, do you believe that they're going to manage this situation, raise capital, get to mass production, and turn the corner, in which case, you know, this could be a very long-term buy and hold, or do you think they're not going to make it to the finish line? The hurdles are just too big to overcome, and they're going to go to 0. So I am not a financial advisor, and this is not financial advice. I can't tell you what to do. I know for myself, I'm getting deeply concerned at these levels. I have been hanging in there with these guys for a long time, but it's starting to look grim. So I wish them the best. I hope they turn the corner, but to be honest, at this point, I'm quite nervous. So those are my thoughts on Lordstown Motors, stock ticker RIDE. And thank you for watching, and we will see you in the next video.